So let's start with the daily time frame, daily chart. Yesterday we have a doji, not a very strong closing for the bulls, but still we might retest this low, the yesterday previous candle's low. So I'm gonna mark this as PDL or the previous day's low. Mark the low of this candle और फिर हम लोग जो नेक्स्ट कैंडल को मार्क करेंगे नेक्स्ट कैंडल वुड बी द प्रीवियस डेज हाई beautiful orders and do back unlock. I'm going to mark the previous day's high. Also keep this in mind that today is the first trading day of the month, so do not forget to mark the month opening. That is really important. So how I mark it with these two lines, the white lines, for me, it represents the volume imbalance or the opening of the previous candle, the closing of the previous candle and the new candle's opening. That would mark the monthly candle opening or the monthly volume imbalance. There must be some sort of a gap here. We move to the lower time frames, we can see that there will be a gap somewhere around. You see this gap when the 4 o'clock close, the 5 o'clock. This gap is what I'm referring to. Coordinates. Okay, we have 4 minutes till the market is going to open. It's just 300 and 100. Yeah, 30, 30. Yeah, right around this point. Okay. So we have marked the monthly volume imbalance. So this is the new month open. We open, closed here, opened right around here. We are, this is the first high of the month. That's relevant, that key point. That is this level is important. The next level is this, the weekly open or the N VOG or the previous days N dog. That's also important. So keep also that on your charts. We have about 2 minutes till the market is going to open. We are gapping down. Let's see if the market can contain or sustain this gap. So we have yesterday's gap is also opened. This is still open. Mark the previous day's high and the previous day's low. So yesterday the market never went below the 4 low. We have a very, very high probability that the market is going to retest the previous day's low. Okay, on the and on the 4 hours time frame on the electronic trading hours, it's clearly a range, right? It's clearly a range. This bar was the all outside bar. This was the outside bar. Now we are within that outside bar's range. But it's best that this from this price to this price should be treated as a range until we move above or below those points. and give a strong closing, then that would be a good confirmation. The 4 hours, it's bearish. Market is open. We're opening below the previous week's high. Let's come down to the 15 minutes. On the 15 minutes, 60316. Now, 623 is the next important level. I am waiting for the 5 minutes, the first 15 minutes to close. So 623, 623. Okay, that's not so far. How far is the gap? For the market to fill the gap, it needs 70 points. 70 points, right? On a 15 minutes, market made a wedge, closed above the previous. This is strong closing, and also it closed the gap. This gap, 530 gap. At open, the low probability things that are low probability are more likely to happen when the market opens. So let's see and wait and see how the prices react to this point. First 5 minutes will close in 1 minute. We have 1 minute left to the first 5 minutes. The market tried really hard to close above the previous week's high. We are failing to close above. The first bar is a doji bar within the context of this range. This range. This context. 550, 550, 61, 22, 550, 61, 22. On a 1 minute, we are making a contracting triangle. Dojis in it of itself are a triangle, so Second bar of the day is also an inside candle. So, what is more likely to happen? We are going to take out the high and the low of the first candle. It's basically an 80% probability that we are going to do that because we have an inside candle and an outside candle relative to the two, and we are in a trading range. So, it's common for the uptrends to become like this. You can see on the daily time frame. See the candles are getting weaker and smaller, smaller and weaker. So we have 3 minutes till the first 15 minutes close. If the first 15 minutes close like inside within the inside candle, that makes it a very low probability. If we fall below this level and below this level, then we can expect a second leg towards this box. But for that, I need a strong closing below this low on a 15 minutes or this low. Then I can target this green box. Now we are getting somewhere with this. 2 minutes left, and we are moving below the previous low. We've taken out this liquidity above this point. That can become a trap zone that where traders are trapped, and we can expect a second leg towards the downside. That's nice. 48 minutes. 189, 489. Okay, the closing was very bad. not ideal. But still, if we move below this price point, below this low, uh, then I will sell it, obviously. Then I will sell it aiming for 1 to 1 risk to reward ratio, aiming for 20 points. I can hold it for a swing trade, aiming for this point or the close of the gap. That blue line is equivalent to this box on the Qs, and the opening would be the close of the gap. We have yet to test the previous day's low, so keep that in mind. We have closed the gap on the hourly time frame. Okay. Really not the best trade in the world. Oh God. Might retest to the moving average. What coins? So far, the range has given us like 11 points, risking about 20 points. So this would be the one-time risk. One-time risk would be 21, but I need a close. After four, this follow through should be strong for a second leg. We have about 6 minutes till the first 30 minutes will close and the new hour will open. It was a bad follow through. 6 from 20 to 26 area 20. 3 minutes till the hour is going to close, and the sixth hour, the sixth candle of the hour will close. If we get a follow, if see this, we are not getting any closes on the 15 minutes time frame. Okay, if we get a close below this 5 minutes low, then it's obviously an indication of a range. It might get stuck here for 6 or more bars. More. The opening of the new hour had news right around this point. Joel job opening, Jones. So this, we never got a closing about that, never got triggered. So let's see. Retesting the open of the day again. Hmm. Bar number eight. Bar number seven was an outside bar. Bar number eight is trying to move above the range, but it is leaving an imbalance to its tail. We have tried repeatedly to move above the previous week's high today, failing to stay above the previous week's high. We are below the moving average even on a 1 minute time frame. So that makes dangerous for the bulls. Single standard deviation of this candle, the outside bar on the 4 hours put us back to close to this low. So that's something. On a 4 hours, it's more bearish down to the 1 hour, still bearish. 15 minutes, we're making a range on a 15 minutes, but overall, the higher time frame bias is still bearish more than bullish. So if we break down below this yellow range, I would like to short it, aiming for at least one times my risk. That would be 40 to 50 points. We have a previous day low, we have a gap to close. So bar number 9, still within this range. So on a weekly time frame, we haven't moved anywhere on a weekly time frame. This is the whole week and the month, total range of the week and the month. So okay, long from this point, aiming for at least 1 to 1. We are retesting the moving average. That's the this will be the first target, the second target, and the final target would be the open of the month. And this imbalance on 15 minutes candle. I need a closing above the moving average on 5 minutes. That would be a good breakout from this overall range, not just the first 15 minutes. Made a wedge. It's a bad follow through. I can get out break even if we get a bad follow through. Putting my stop loss at break even. Definitely likely to close this gap, but still I would take it my chance, risking 5 points. That's a bad follow through. 720, a bad follow through. If we get a breakdown now, this would be really, really violent. This can be really violent if we break down right now on a 15 minutes. This would complete the whole range. This was the first leg, second leg, third leg. We'll come back to the opening of the first leg and then a bear flag and follow through. We're back inside the initial range. That's what I'm talking about. 38 more seconds. I need a closing below this range for a single minute. See what I said. This is going to be really violent. We have completed the range. We're going to come back to the lows of the start of the initial range. We are yet to test the previous day's low, yesterday's low. This is an outside bar. This was an inside bar, an outside bar. Again, this was an outside bar. So what is this? This is an overall a trading range. We have an imbalance on 1022. Can we expect some sort of some second leg? This is a strong closing for the Bears. It needs a good follow through. It needs a good follow through. Otherwise, it's all going to waste. We have 5 minutes till the first hour of the regular trading hour session is going to close. Risking 17 points to get 47 points. Let's close this gap once and for all. The It needs a good follow through. We are retesting the previous day's low. One times our risk, we've achieved one times half of this risk. If you go for the whole initial range, risk of the initial range, then likely to target this point. And if you move to the swing trade, this is a 1:2 reward trade. If we go for the whole target, that would be 521, filling the whole gap. We're about to fill the gap. 20 points, 20 more points. That's a strong enough follow through. These two legs or the three bear bars are strong enough follow through for a second leg. Okay. I'll get out at the low of this bar, 1 to 1.45 is to reward ratio. This is the closing of the first hour of the regular trading hours. If we move to the 1 hourly time frame, the first hour is the bearish candle. Okay. Overall, what we are doing on a higher time frame is making some expanding triangle, something like that. In a 15 minutes, this candle is strong enough for a second leg. I'll be getting out the high one, at the high one buy. That's really nice, really, really nice. And my target is achieved. See this point. Okay. If I were to hold this because I do not have a reason to get out, I would still hold it to the first two standard deviations. The next point I would be holding it to, that would be this blue box or this blue line. This blue line. I have gotten out right around this point, right? It's not okay. For swing trade, this is the swing trade. A little above this point, okay? Let's aim for 500. It's First trade was 1.46. The swing trade is 1 to 3 risk to reward ratio, which is good. Now, what is this? This is a bar micro channel. We more often than not, 65% of time, we get a second leg of the 3 bar micro channel. We still haven't closed the gap completely. The gap is still left 4 points. We have reached a single standard deviation of the initial range, right? So that's why it is retracing a little bit. Have gap closed the gap completely. We have also gotten we're very close to a single standard deviation of the whole range, not the initial range, the complete range. We are very close to it. Our swing trade, bears do not have a reason to get out anywhere around here. If the price comes above this point, then you can get out if the price comes above any of the bear bars. Bears can get out. Now this is a two standard deviation. I'm closing my swing trade. Oh, nice. The full target on the swing trade is also achieved. Okay, two standard deviation of this move. The target of 68 points, risking 24 points. Very close to the original target other than the standard deviations, that is 489. 489. Very close to the original target other than that. So, guys, I'm using this streams as my personal journal, so I'm gonna be reviewing my day or rating my day based on these categories. So just ignore this. Okay, guys. I don't think anyone was watching this anyways, but still, going to close this now.